Okay, so I had a student email with the question, not quite understanding impairment loss, recoverable amount. So I'm going to go through it a bit more here. So an impairment loss is when you compare the book value, which is the value on your books, so the assets value less accumulated depreciation. You're comparing it to the recoverable amount, and that is what we're calling the amount that you would, if you were to sell the asset today. You know, if you were to get rid of that asset, what could you sell it for? What would it be? What would the value you would receive? So obviously, if it's on your books, if you have something, I'm going to go through an example here that they give you in the book, but just not with this example. If you have an asset that's on your books as $20,000, so you're carrying that asset on your financial statements with a value of $20,000, but you determine that the recoverable amount is only $10,000. So that if you had to get rid of the asset today and sell it, the fair market value of that asset, what you would receive, is only $10,000. That means that your assets are overstated. That you're saying that you have an asset worth $20,000, but in reality, it's not worth that much. So you need to write that asset down so that okay, my doorbell just rang. So now I have a puppy dog barking up a storm here. Sorry if you can hear that. So now you need to write that asset down to its market value. So you would record, so here we're going to go look through this example. So Fitbit Inc. have equipment with a cost of $50,000 and accumulated depreciation of $27,000. As part of its year-end procedures, they perform annual asset impairment, find that the equipment has a recoverable value of $15,000. So $50,000 cost less $27,000 accumulated depreciation means it has a book value of $23,000. That's the cost less accumulated depreciation. So it has a book value. So you're carrying that asset in your financial statements with a value of $23,000. But the recoverable value is only $15,000. So recoverable value is, if you had to sell that asset today, what would you get for it? What would you recover? So that means there's an $8,000 difference. So you're carrying the asset on your financial records $8,000 higher than what it should be. So you're going to record a loss. So impairment loss, debit, and then you're going to credit that asset account. So here in this case, it's equipment. You're going to credit that asset account to bring that asset's value down $8,000. So you're going to record the loss. Then at the end of the year, you're going to have to record depreciation again, but we're assuming here that it was straight line depreciation. But now you're not going to record the same amount of depreciation that you have been in the previous years. So it was originally valued, the cost was originally $50,000. We are writing it down $8,000 here. So that leaves $42,000. That's the new revised cost. $27,000 of that has already been depreciated because the accumulated depreciation was $27,000. So that means that there's $15,000 remaining book value, remaining to be depreciated. It says here the remaining useful life is 4 years. Residual value is 0. So there's $15,000 remaining to be depreciated over the next 4 years because it's straight line depreciation. It's equal amount every year. So that means now for the next 4 years, the depreciation expense is going to be $3,750. So you're taking the original cost less the amount that we wrote down the asset with the impairment loss, which will give you the revised cost of that asset. Then we subtract what's already been depreciated to get what's remaining. And if there had been a residual value here, we would then subtract the amount of the residual value, but there is none, so we're just going to divide it by the number of years that's left to get the new depreciation. Hopefully that helps explain it. If it's not quite clear, let me know if anyone is not quite understanding that. A good place, this person sent me an email outside of the course through my college email, if you have questions, it's best to post them on the discussion boards. I do monitor the discussion boards, but that way if there's a question I can respond, and everyone, in this case I did a video, but if I'm just typing up a response, then at least everyone has the benefit of the answer.